Ay. Hello, everybody, and welcome again to another Wisdom Wednesday podcast. We are really happy we have another guest. His name is Manuel Lucas. He is the CEO and founder of Lucas Investings. Hi, Manuel. How are you today?
Good. Thank you for having me, Aleja.
Thank you for joining us. And as usual, we have Sia Mohi, our COO, and Gavi, our business development manager and leader. So, Manuel, we're really happy to have you today. There are a lot of people, wondering and questions about where to invest, how to start in real estate, where should invest. The market can be volatile sometimes, should be good invest in the United States, in Europe. So it's really good to have you here. For those meeting you for the first time, who is Manuel Lucas and what first pulled you into the world of real estate investing?
Sure. Well, I come from a business development and sales background in the hospitality industry specifically, and that taught me a lot of relationships and execution, most importantly. And what pulled me into real estate basically is the desire to build something that creates value over time rather than just trading hours for dollars, right? We all want to get out of the so-called rat wheel, right? And so I'm based in Florida. I'm expanding into the Midwest. The approach I've found that works, it's quite simple, really. It's doing your homework, investigate thoroughly, vet the markets and the models carefully. There's different strategies that you can take on, but ultimately it's to execute decisively, right? And so that balance between doing your homework and taking action, it's what I find separates you from building a portfolio rather than just talking about it.
Sorry. So with that being said, you're clearly not the only one doing this. And in the last 5 years, we've seen a lot of institutional investors really kind of hurt the average consumer when it comes to purchasing properties. And we've seen the prices, especially down here in Florida.
In Florida.
My house more than doubled in price in 4 years, which is, not normal. Now, New York obviously helped a lot with that, with their mass exodus, but we've also had a ton of institutional investment. With you being you're not BlackRock, right?
BlackRock.
Yeah. So how are you competing with Larry Fink and all those guys, making sure you're able to be competitive when you're purchasing property, but you still have to make money. Those guys, they didn't care. They just bought everything they could find.
Right. I mean, it's just like with politics. You can't. I don't focus on what the president does or what the government is doing. Really, it's just as I was saying, just taking action, vetting the markets. There's different markets, like you were mentioning. Florida is a market that it's super expensive right now, and where if you invest in it, the return on long term rentals is not gonna be really that good. Whereas in the Midwest, you can still find properties under $100,000 that are going to rent for over the 1% rule monthly, and that are going to be cash flow positive. And so, yes, there is institutional investing everywhere. As you mentioned, they don't care about the money. They have enough money to deploy anywhere and everywhere. But there's always opportunity. I'd like to place myself in that positive mindset and just look out for opportunities that fit your model.
So I love how you said the 1%, because I'm a big believer of the 1% too. If the value of the home, if you can get 1% a month in rent, that's a good investment. Because the way I look at it is 1%, you can do that in a stock market. And if you can do that if you can do it with real estate and get the appreciation, that's fantastic. So I'm with you. Under the 1% in Florida is definitely less than 1%. So
Totally.
I don't blame you for looking into the Midwest. But how did you find a way to stay competitive against the bigger institutions when their resources, I mean, they're incredible resources that they have. How did you do that?
I would say finding the right opportunity to invest is the first thing that comes to mind that fits my strategy. But to stay competitive, honestly, it's to be there, to be responsive to your tenants, to always be attentive to detail, and to just be there, just be a responsive landlord, and have that human side, that connection. That's why I was talking about building relationships. Just being there for them when they need it, resolve issues super quickly, and that just makes you a good landlord, and that just makes tenants want to stay longer because you're delivering, you're not just collecting rent.
Okay, I'm going to ask you a question first. So, talking about opportunities, if someone feels like they are late to the game, what will you say about entering the real estate market today? Like, is it really saturated, or are there still smart entry points?
I personally don't think there is a better time to go in anything you want to do, really. But in real estate, you just have to pull the trigger, as they say, right? You just have to decide, but make a decision, a knowledgeable decision, right? You want to do your research. You want to know what you're doing, in the sense of knowing what strategy are you going to execute, knowing what market are you going to be in. um, but being late, that's just an excuse that we all put in our heads, and I include myself. At one point in time, I also thought about that. Oh, I'm late. Oh, I don't have the knowledge. Oh, I don't have the enough money. Just excuses. Just build your foundation, save money to deploy it, not just for the sake of saving it. It's different to have savings rather than to be building a capital, right? The concept is different, but it's never too late to do anything, honestly.
Yeah,
Manuel,
I'd have to agree with him on that one. Right now is not the best time to be an investor, but that's not an excuse not to be an investor. Like 5 years ago, anything you touched was gold because you had 3% interest rates. You could be highly leveraged. It was incredible. Now it's much harder. That just means you have to work harder.
But see, it's perspective, Sia, because as you were saying, 5 years ago you can find interest rates of 3.5%, right?
Mhm.
Right now it's at 6.57, 7.5.
Mhm.
You could argue, well, it's double the interest rate. It's not a good time to get in. But if you look at it into perspective, I don't know, 20 years ago it was above 10%. So it's
Mhm.
really, is it really that expensive? And there's also other strategies that you can later on refinance if the rates go down dramatically, where it makes sense to refi. But again, that just supports my point, in my opinion, that there's no good time, or you just have to go in, pull the trigger, and get in the game, and then figure it out as you go along.
So
then
you're
Manuel,
trying to say the timing has nothing to do with it. If it's a good investment, it's a good investment.
It affects, evidently, the cash flow. For example, if you have a high interest rate, that's going to eat up the cash flow that you may generate. But it's better to be in the game and then figure out strategies to improve the cash flow, right? Rather than not be in the game at all, is what I'm trying to convey.
I agree. I agree.
Manuel, let's say just want to start right now, and I know the market is, volatile sometimes. I don't know where to start. What would be the first step that you will say to somebody who wants to start today?
I mean, to start today is start doing research and start saving intentionally, getting to that habit, and commit to financial planning also, right? Again, another thing that people may use to not go in the game is, oh, but I don't have the money, I don't have the resources. We can all save $50, $100, $200 a month, right? Depending on personal situation. But if you get into the habit of saving with intention to deploy that money later on into investing, then that's the first step. Also, you have to educate yourself as well, knowing what strategy works best, why would you want to use that strategy, etc. Right? And for starters, you need good credit. That's just the basis of it. And so that takes time to build. So if you're going to get started in it, you want to either partner with someone that has the good credit already, or if you want to do it yourself, then you have to build your credit to a point where you can get financed in good terms, right? Um, what else? I would say if you want to get started, you can start building those relationships from the get go. Don't just wait until you're actually closing a deal. Rather, you can start building relationships, getting to know, for example, real estate agents. Those real estate agents will then send your way their contractors that they trust, and then they can also suggest some lenders or some bankers, and you just start talking to those people, start building those relationships, and over time, they'll pay off having those relationships because you'll know what the next step is, and you'll know how to navigate the waters of real estate investing.
Okay, but let's think if you were starting from zero today in this exact market, what would your 12-month strategy look like?
My 12-month strategy. Well, first you have to decide what strategy you want to do. Do you want to do BRRRR? Do you want to do fix and flip? Do you want to do what exactly do you want to do, right? So my focus or the model that I've done for me in a way, it's I've been focused on residential holds, right? So the idea behind it is that they deliver both cash flow and appreciation, right? But the 12-month strategy would start scanning the market, find the markets where you can find that 1% rule. So, for example, as CEO was saying, here in Florida, if you buy a $500,000 house, right, you're not going to rent it for the 1%, $5,000 or more. You're not going to rent it for $7,000 a month, right? At, at best, you'll rent it for $2,500, $3,000, right? And that's 0.5, 0.6% a month. So you from the get-go, Gabi, know, okay, Florida is not the market that I want to invest in. Why? Because it doesn't deliver the return that I want, which is at least 1%. And the average price per home, it's well above of what I want to do, right? $500,000. Not everybody can afford that, right? And not everybody can get financed on that either. And so you start finding the market, say, for example, I don't know, Ohio or Alabama or Tennessee. Those are markets where you can find cheaper homes that will rent for a lot more. You can find a $100,000 home that will rent for $1,500 a month. So 1.5% a month. That's attractive, right? And so once you discovered your market, it's just basically building around it. Just I would create a mental map where you basically what you do is you're just strategizing and finding the different stakeholders that will be needed to actually execute, right? So make a list of contractors or get a list of contractors, for example, from your real estate agent, right? So now you have a list of people you can contact for any type of work. Have a brokerage firm, have a real estate agent ready, uh, start talking to bankers and lenders to see who will lend you on what terms they will lend you, etc. And so that's how I would do it. Start connecting the dots, basically, right? Building that map that will help you navigate until you close your first deal.
Yeah, and to kind of piggyback off of that, when I first got into sales and anytime you want to try something new, what I always tried to do was get an understanding of what am I doing before you get into it. So when I got into sales, I asked the top sales guy at our company, can I take you out for a cup of coffee? And everybody drinks coffee, right? You go down and sit down, hey, tell me, what made you successful? All right. Or a cup of tea, Alejo, whatever you like.
Thank you so much. Now we're talking.
So you take them out and you just kind of pick their brain. And then you don't just pick one of their brains, but you take out 3 or 4 different people. If you're getting into real estate, and I have a passion for real estate as well, so I love real estate. Take out mortgage lenders. Go show up to their office, buy them a cup of coffee, whatever, or a cup of tea, and just say, "Hey, how's mortgages looking? What does the future look like right now?" Take out real estate agents. Real estate agents, they'll talk to anybody. They're always looking for business. Talk to different people. Talk to contractors. Talk to plumbers. Talk to whoever you can. Get an understanding. Talk to somebody who's flipped a house. Talk to somebody who's rented out a house. And hey, ask them, hey, listen, can I go in on the next project with you as a minority partner? Maybe you can throw in a couple of dollars, but you're handling a lot of the labor. Hey, there's a lot of from the time you purchase it to the time you rent it, there's a lot of time that it takes. You showing up, making sure the projects, the fixes are being done right. If there's a problem at the house, someone needs to show up, make sure the tenant's happy, like Emmanuel's been talking about. You handle a lot of the labor part of it. And then during that time, you're gaining a ton of experience. So when you decide to do something on your own, you've already made your mistakes and it didn't cost you anything. You're able to go in, make less mistakes, and be more profitable.
And that's a really good strategy, but only if you are on site. So, for example, if you're doing out of state investing, and that's another excuse that I found from just people talking to, oh, but I need to be there to oversee the labor and oversee the renovations and help the tenant, and you really don't need to do none of that. In today's world, see how we're doing this podcast, right? Digitally, everybody in a different part of the world. We can just look at each other, talk to each other, and that's it. And that's how I've handled it so far. Talking over the phone with the real estate agent, managing it from distance, just knowing the really good contractor that the real estate agent suggested, that I've talked to and worked with and have seen the results. So now he's my right hand, for example, right? And just building those relationships. Hey, can you do this for me? Hey, this happened. Can you stop by? Everything managed over the phone or through the web, and so it's, to me, it's really, really, really about the relationships you build. Because people when they like you, they're willing to do anything for you, and not necessarily for money. They're just willing to do it because they just simply like you. They believe in what you're doing, and they're obviously trying to do business, right? But in doing that business, they're willing to help you, if you will.
Manuel, I have a question related to what's one common mistake you see new investors make that end up costing them time, money, or motivation in this market?
Well, the first one is not executing, right? Talking instead of acting, right? We'll want to make money, we'll want to invest, but the reality is that the majority of people rather talk about it than actually pull the trigger. So people get stuck in I think it's known as analysis paralysis, right? And so they overanalyze. They wanna have every check mark cleared, and that's really what that really doesn't work, right? You just have you can't have complete control over everything, and as weird as it might sound, you just have to trust the process, trust the people, and trust that everything's going to go as planned. And if something doesn't go as planned, then you can jump in and try to fix it, try to fix it, to make things happen and make things go your way. So first, it's executing. Another challenge is that people are also too scattered, in the sense that they check one model, for example, the BRRRR model. They study it, they start more or less trying to get into it, but then they hear that fix and flip, it's better or more profitable, and then they jump to the next strategy, and then no, Airbnb is better, and so they get into different strategies, but they don't actually, again, pull the trigger on any of them. And when you are in it, also, I feel like people rely too much on, for example, inspections. But inspections are just a general overview of the properties, and you're never going to know exactly what is going to happen until the property is yours and you have a tenant in it. Perhaps you have, I don't know, a run of 36 months where nobody has complained about anything, and out of the blue, the AC breaks. And so you have to have a budget, a fund for maintenance. In the investors that I've talked to, the majority I've heard that has been their main issue, that when something major breaks, they don't have the budget to cover it, and then that affects the whole operation. Those are the things I would say.
Okay, thank you. We like to ask all our guests these questions, like what's one book that has significantly influenced that way you think, whether like in business or in your personal life?
Say it again.
One book that you want to recommend.
Outwitting the Devil of Napoleon Hill.
Okay.
That book basically teaches you that fear is the main strategy that the devil uses to corrupt your mind. And precisely talking about execution, people don't execute because they're afraid to fail. They're afraid of XYZ. And long story short, the book tells you that the absence of God is what leaks fear into you. You can't have fear if you have God in your life, kind of thing. So that's the main message of the book. And that's what I was saying about trusting, I don't know, God, the universe, whatever you want to call it. People, situations, things conspire positively for you, and things sometimes just happen. And you just have to trust the process, trust that everything's going to be okay, and execute, pull the trigger, go along, and let it flow.
Awesome. So we are almost going to get done with these, Manuel, but Gabi has a little game for you. You just need to, don't think, just reply. Just when she's asking the questions, just say your answer, and Sia, you're obviously more than welcome to reply as well to give your answer. So Gabi, you ready?
I'm ready. Okay, so what do you prefer, big risk or calculated risks?
Calculated risk. You have to. That's a skill everyone trying to get into real estate should have. It's about managing risk. It's about managing a lot of things. Yeah, like managing debt is also a huge thing. But to answer your question, managing risk, definitely.
Agreed.
Okay. I know Sia's answer, but Manuel, coffee or tea?
I'm Colombian, coffee all day.
Coffee. Okay, Sia too. I know.
But I'm drinking tea, so.
Okay. Networking events or quiet strategy time?
Both are important. Both are really important. But I've insisted in building relationships, so I'll go with networking events.
Give me quiet
Yeah.
time all day. Give me quiet time all day. I my entire 20s and 30s were networking events. I don't want any more
Yeah.
of those.
Exactly. Both are super important. You have to clear your head, have that me time also. Super important.
Okay, real estate in US or in Europe?
I haven't studied real estate in Europe that much. I know that there's a lot of regulations in terms of pricing. There's good opportunities. I've seen good opportunities in the northern part of Spain, for example. Real estate is not that expensive. There's good infrastructure, but I am all in the US simply because I feel the cash flow it's way higher.
Agreed.
And the appreciation in less than 5 years you won't see any properties under $100,000 anywhere.
Great. And the last one, long-term vision or short-term wins?
I mean, both are important, but you have to have a long-term plan. China, for example, it's a great example of that. They have a government plan of 50 years rather than here in the US every 4 years. It's different. And sometimes the new administration kills the plan of the last administration, so they have to restart again. Whereas if you have a long-term plan and you stick to it, you can see a lot more results.
Yeah, it's long term all day on that one. Short term's nice to get the little wins, but it's all about long term. You're not building anything.
Right.
Perfect.
Commitment.
Manuel, thank you so much for joining us today to give us your feedback and your ideas and everything about real estate. And thank you for the message for everybody out there who is looking to start investing in real estate. Don't forget to follow Manuel in LinkedIn as well. He will be a really good resource for you. Thank you for joining us. Stay tuned. We're going to have more podcasts coming soon. We're going to be sharing them on all our social media. Sia, thank you so much as usual. And Gavi, thank you so much for your time. And thank you to everybody who joined. See you in the next time.
Thanks,
Thank you all.